Hi guys, it's Stock Curry, and we've got breaking news coming out of the White House over the debt ceiling deadline and raising the debt limit. We've also got to talk about earnings coming up on Wednesday and Thursday, as well as some other stock market news that you need to know about. So let's get into it. Tuesday morning, we got some pretty important economic data that ended up being fairly mixed. Starting things off with some positive news, the home builder sentiment pulled out of negative territory for the first time in nearly a year. Home builder sentiment came in at 50, which is neutral. Home builder sentiment was expected to come in at 45, which would have been bearish, meaning home builders would have seen the economy going down. Instead, home builder sentiment came in at 50, meaning home builders are fairly neutral about the future of the U.S. economy. The other news that came out, which was not so good, was that retail sales rose 0.4% in April, which was half of the increase that was expected. It appears that consumers continue to struggle with inflation and that consumers continue to spend less and less money on goods. And this is exactly what Warren Buffett had warned about 2 weeks ago when he said that retail sales were declining and that retailers were dealing with huge inventory gluts, that they would then have to do sales in order to get rid of their excess inventory, which in turn would hurt the bottom line on companies. And on Tuesday, we heard earnings from the very first major retailer, Home Depot. Unfortunately, Home Depot posted their worst revenue miss in about 20 years. And on top of that, lowered their forecast as consumers continue to delay big projects. So as Home Depot joins Warren Buffett in forecasting a weak consumer demand, here's what that means for the rest of the economy. First of all, Home Depot is going to have a pretty significant impact on the stock market as a whole, because Home Depot's awful earnings report is actually the stock market's most important retailer. The bottom line is that the broader market implications of Tuesday morning's post-earnings stock move for Home Depot, it was initially a drop of more than 5%. That's going to be pretty significant for the stock market. Home Depot is the most impactful retailer in the price-weighted Dow because it has almost double the weight of Walmart. Home Depot also has a greater index influence in the S&P 500. And unfortunately, this is Home Depot's first earnings decline since May of 2020, near the start of the COVID pandemic. But the real story here is the demand destruction. That is, consumers spending significantly less money in the economy, as indicated by Home Depot's huge revenue miss. And it wasn't just a revenue miss, it was also the biggest revenue drop since the financial crisis. That means consumers are now spending significantly less than they were last year, to the point where consumer spending is cut back to the depths of the financial crisis. And this could have some pretty significant implications for the U.S. economy, meaning we may very seriously and very quickly be heading into a recession, even if the labor market still appears to be strong. And this is going to have implications for other retailers as well, such as Walmart and Target, both of which report earnings this week. Target is already trying to rebrand itself, trying to get shoppers to view it as a place for groceries rather than other goods, since Target wants to attract grocery shoppers as consumers buy fewer and fewer discretionary goods. Target is essentially trying to take the same playbook as Walmart, trying to get consumers into the store to buy groceries, since inflation has caused consumers to cut back on discretionary goods and focus a lot more on necessities such as groceries. This would be a way for Target to keep its sales up despite consumers not spending money throughout the entire rest of the store. Keep in mind that Target reports earnings Wednesday and then Walmart reports earnings on Thursday. So these are both going to be some very major earnings in the retail space, which will have pretty significant effects on the Dow and the S&P, less so the NASDAQ and Russell. And other signs that the economy is slowing down and the labor market is taking a hit come from Western Union rival Zeb's laying off 26% of their employees. And it's not just technology that's doing layoffs. Vodafone shares dropped 7% after the company announced 11,000 jobs would be cut. Vodafone is a telecommunications company, so as you can see, the job cuts are not just happening in technology, they're happening throughout the economy in multiple different sectors, and this is causing major concerns that an overall recession will in fact occur by the end of the year, just like the Federal Reserve is predicting. Now, the other thing is we've got some more short-term issues that we need to be concerned about besides just a possible recession 6 to 9 months from now. And some of those short-term issues include the banking crisis, which continues onward. Even though we may be over the initial bank runs that caused quite a few banks to collapse, we now have to face the fact that a lot of banks are facing massive losses on their commercial loan books. And with millions and billions of dollars worth of commercial loans coming due this year, it's very possible that banks could see even more significant losses than they've already seen from their treasuries and other investments. And unfortunately, JP Morgan Chase is not going to be there to bail out banks again. Jamie Dimon said it is unlikely that JP Morgan Chase would acquire another struggling bank. So if another bank does collapse, and most people think more banks will collapse, JP Morgan Chase will not be there to buy them out. And so far, every single time JP Morgan Chase buys a bank, or any bank gets bought out, it's more of a Bear Stearns moment like in 2008, where, yeah, we have a banking crisis, but it kind of gets resolved, and we're kind of okay for now. Once banks don't get bought out and they actually start collapsing, then we end up with more of a Lehman type moment where we really see a major stock market crash. Keep in mind that after Bear Stearns' collapse in 2008, it was in March of 2008, the stock market recovered fairly quickly. It didn't start its major sell-off until Lehman collapsed about 6 months later. So banks might be okay for now, but there's a lot of issues still ahead on the horizon, which is why bank stocks haven't recovered yet and probably won't recover for at least another year. Now, even more shorter term than the banking crisis, we have the debt ceiling limit, as well as the debt limit increase that Congress is trying to work on. The debt ceiling deadline at this point is June 1, and Congress, the president, the Senate, they're all working together to try to get this fixed. And late in the day on Tuesday, they held a meeting together for about an hour, and the results of that meeting were somewhat positive, but not as great as President Biden's trying to make it sound. The good news is progress was made in the White House debt limit meeting, and talks are going to continue as the U.S. rushes to prevent a default. But the reality is President Joe Biden and House Republicans remained far apart on Tuesday, even following an hour-long meeting on the debt ceiling. The good news is attendees did say that they made progress, but Congressional leader McCarthy said that doesn't mean that we're going to get an agreement. Biden, on the other hand, came out of the meeting very positive, saying that there was an overwhelming consensus, I think, in today's meeting with congressional leaders that defaulting on the debt is simply not an option. So where do we go from here? Well, generally, the way this is going to work out is while Congress could very simply just raise the debt limit in literally a 2-paragraph bill that would very quickly get signed, the problem is Republicans in Congress, who essentially have a minority in the overall government right now, are trying to use this as an opportunity to cut back on spending. Now, President Biden is trying to negotiate here and saying, rather than cutting back on spending, why don't we raise taxes to increase our income? And this is just completely unacceptable for Republicans. They don't want to raise taxes. That's really not the point. While they do want to help balance out the budget, they don't want to do it by raising taxes. They want to balance the budget by cutting spending. Now, this is kind of ironic because when Republicans were in full control during the Trump years, they spent way more money than Democrats did. Still, Democrats followed it up when Democrats were in full control, and they spent a ton of money also. So really, the problem is equally at blame by both Democrats and Republicans. And the fact that they're completely unwilling to work together, even though they both agree there is a problem, is just kind of ludicrous. So right now, there just really isn't a lot of progress. Democrats want to increase taxes in order to balance the budget, and Republicans want to cut spending in order to balance the budget, and neither one is willing to do the other. Republicans don't want to raise taxes, and Democrats don't want to cut spending. So they're kind of at a standstill right now. Now, ultimately, the way this is going to end up working out is that they will end up raising the debt limit. Now, they might not do it by the June 1 deadline. We may end up getting a government shutdown, which has happened many times in the past. And ultimately, when this does get passed, the way this is going to work is it's going to be full of what's called pork. And when we talk about pork here in the US, when we're talking about Congress and government, we're talking about a whole bunch of little tiny, just individualized bills that have absolutely nothing to do with the debt limit whatsoever, that just gets stuffed in there in what's known as a must-pass bill. The debt limit increase is known as a must-pass bill. It has to get passed to avoid catastrophe here in the United States. And because it's a must-pass bill, this is a great opportunity for all kinds of little tiny, just lobbyists to get little tiny things into a bill that normally would never pass. So what ultimately is going to end up happening is the debt limit will get raised, but a whole bunch of special interests are going to get met. And it's just going to be an absolute crap show. And it's going to be horrible. But, you know, that's kind of the way things work in the US. There's really nothing we can do about it. And yes, it will get passed at the very last minute, at the midnight hour, probably on a Sunday right before catastrophe hits. That's usually the way these things go down. So we're just going to have to deal with all this back and forth crap from politicians and all this talk that it's the other side who's to blame and all this other crap. If you can't tell, I hate Democrats and Republicans equally. Anyway, the point is this will get resolved, but while we go through all this political hoopla, the stock market is most likely going to decline. And on average, the stock market declines about 5% while we fight and bicker over raising the debt limit. Now, the stock market is down about 1% so far. Probably got around another 4% to go over the next 2, 3, 4 weeks. And in that time, we are making money on the way down. If you guys want to know what we're buying and how we're making money with options as this whole fighting continues with the debt limit increase, come join our options coaching program where I'm going to teach you how to make money no matter which way the market goes. Doesn't matter if it goes up, down, or even trade sideways. If you want to learn how to trade options, you want to learn how to make money no matter which way the market goes, then schedule a call with my onboarding specialist who can go through the entire options coaching program with you and explain what it's all about. And you can just see if it's going to be a good fit for you or not. You can schedule a call with the onboarding specialist at weprofitdayandnight.com. That's weprofitdayandnight.com. If you got a lot out of this video, then be a good friend and share this video with your friends and family so that they will know what's going on in the market as well. And don't forget to hit the like button and subscribe. And if you missed yesterday's video where I gave you a lot of important market news for the week, make sure you watch the last video that I uploaded here.